Hi everyone, my name is Meng. I'm the co-founder and CEO for Funding Societies Malaysia. Funding Societies is a peer-to-peer financing platform whereby we connect creditworthy SMEs looking for access to financing with investors via our website and via our mobile application. So what we do as Funding Societies as a platform is that we help to do the credit assessment and due diligence for SMEs looking for financing. And once they are approved for financing, we make them available to investors via our website and mobile app. And investors can then view those investment opportunities and they can make their own decisions to invest or not. Investors could invest from as low as 100 ringgit and onwards. So Funding Society started off in Singapore in 2015. We moved into Indonesia in 2016 and 2017 we launched in Malaysia. So right now we are active in these three countries. So we have dispersed more than 5 billion ringgit across these three markets to more than 40,000 unique SMEs. For Malaysia, the type of SMEs that we serve are typically micro, small and medium-sized enterprises. Generally, we focus on providing access to financing for smaller ticket amounts and for shorter tenure. So on average, for example, SMEs could get anywhere in the range of a couple thousand ringgit to a couple million ringgit. On average, it's probably around a few hundred thousand, 1 to 200,000 ringgit, and the average tenure will be somewhere around 6 months. So generally, there are a couple of products that we offer. So one is a term financing product, typically up to 12 months in terms of repayment schedule of equal installments. We also provide trade financing products that is either financing payables or financing receivables for SMEs. So for these trade finance products, the tenor is typically 3 to 4 months in terms of credit period. So when we started off the company, our hypothesis was basically that for traditional financial institutions, they do very well in terms of serving the retail customer, the consumer, and also do very well in terms of focusing on serving the corporate banking type of customers. But where there is a gap in the market was basically small and medium enterprises, which are very different in terms of their nature of business and their financing needs, and there is no one-size-fits-all that's able to serve them. Right? So traditional financial institutions hence find it difficult to serve these micro and small size medium SMEs because of the cost involved to reach out to them and to also provide a tailored financing solution. So where we fit into the gap is that we are able to, using our technology and our platform, be able to reach out to and also to tailor our financing products in a much more cost-efficient manner so that we are able to serve these SMEs at scale. So we have a fairly simplified process in terms of application for financing. It could be the turnaround time for approval could be as fast as 2 days. But generally, we try to keep it within a maximum of 2 weeks from the point of application of the submission of their financing documents up to the disbursement of the funds into the bank accounts of the SMEs. So generally speaking, we have 3 different structures in terms of financing propositions. So one is a term financing product, one is a receivables financing product, and one is a payables financing product. These 3 products is currently something that we currently offer, not just in Malaysia but regionally. Going forward, the plan is that when we launched a Sharia-compliant proposition, we will first start off with trade financing products, which is financing for payables as well as for receivables, and then move on to other products as we see the market demand develops. So in terms of the submission, in terms of the financing documentation requirements, we have a fairly standard set of documents that most enterprises would have. So depending on the kind of financing that you're looking for, it could include things like your bank statements, it could include financial statements for larger financing amounts. So after being in operations in Malaysia for the past 3 years, we recognize there is a market gap when it comes to Sharia-compliant financing options for SMEs. On one hand. On the other hand, we also notice there is a gap in terms of investment products that are Sharia-compliant as well. Right? I think this is true for not just individual investors, retail investors, but it's also true for institutional investors that have very clear mandate of only investing in Sharia-compliant credit assets in general. So we do see a big market opportunity there in terms of SMEs requesting and inquiring if our financing products are Sharia-compliant, as well as very clear demand from institutional and individual investors around Sharia-compliant investment assets as well. So generally speaking, we have three different type of financing structures. We have many companies that have come back to us for subsequent financing applications. So specifically, for example, term financing products, when they are close to maturing, they will come, let's say, for example, for a term financing of 12 months. When it comes to the 9th and 10th month, when they have made good repayments and track record with us, then they actually come back for subsequent financing. Likewise, for trade financing products, whether it's financing their receivables and payables, they actually come back on a very regular basis, on a monthly basis, for subsequent drawdowns. So for trade finance products, generally they're structured as a line facility. So what happens is that every month or every quarter, they'll make drawdowns, and when they make the repayments, they can then subsequently draw down again. So we do see a lot of recurring customers that is applying for financing and getting financing drawn down from our platform. In terms of documentation requirements for SMEs who are keen on applying for financing through us, it differs based on financing products. So for term financing products, generally we would require things like your bank statements, your agings analysis, and your financial statements, which is quite standard. For companies that are unable to provide audited financials, we are able to work using the management accounts as well. So we are quite flexible in terms of doing in terms of documentation requirements. But in order to protect investors, then we will be triangulating and verifying some of the information in such documents. On the other hand, in addition to the documentation requirements for term financing products, for receivables financing and payables financing, we also look at the track record between the SME as well as their customers or their suppliers. And in this sense, we are able to verify the historical relationship and track record between these parties and be able to provide the financing tailored towards the financing needs for the trade finance products that we have. One of the other key reasons that we are looking to launch a Sharia-compliant financing product and investment product is also aligned towards the nation's agenda to position and to build Malaysia as a global investment hub and financing hub for Islamic financing. So I think there's a lot of support that's being given by the government as well as the regulators in terms of helping to develop the right framework for us to build a very vibrant financing and investment ecosystem for Islamic financing. And I think that's one of the key reasons why we are very keen on this particular market segment. I think out there, when we look at working with different ecosystem partners, we also see a lot of Sharia-compliant ecosystem partners, for example, halal-only e-commerce platforms, and so on and so forth. So through this opportunity, hence why we are very keen on building up and also launching our Sharia-compliant investment proposition and financing proposition for Malaysia.